Hello everyone, this is Patrick from EasyFX Code Trading System, and it's Saturday the 26th of March 2022, and it's the weekly technical analysis for spot gold and dollar yen for the 5th week of March. And let's begin with spot gold, where it has did climb up higher, but past the 1950 zero level to hit the 38 pip retracement. Started from the previous week from the 1900, just slightly above the 62 pip, and after hitting the 1950 and pull back, then it managed to continue higher on Wednesday and Thursday of last week. Let's take a look on the 4-hour time frame. And yes, it's started to bounce off the 4-hour 200 in yellow here, and that was the higher low, rising trend line. So that gave the bounce to climb up higher. That should be on the Wednesday and Thursday, follow through, and settle back just near the 38 pip. All right, let's also take a look on the weekly time frame. And after the long wick spin top of the couple of weeks ago, then the fall back to where it started from on the 1950, it managed to recover somewhat back up to this 38 pip, but then in a smaller range. So in a harami here, you'll see whether it's going to consolidate further, or whether it's going to start to test one of the other ends. Let's go back to the daily time frame, and yeah, let's extend this trend line here. Okay, so this resistance now has definitely shifted to this fib, and support is still at the daily 55 EMA, coming up to the 1900 round figure. So that's definitely a strong support area. I think we can remove this area for now, and perhaps identify another significant resistance zone between the 21 pip retracement 2008 and the 2000 level. That's resistance. Okay, and it's possible that it did okay, so we extend this bullish channel trend line as well. It did bounce off from the 1900 and this upper channel trend line. But yeah, I think we can remove this level here. So anyway, meanwhile, let's see this coming week there's any impact from the non-farm payroll report on Friday. It could attempt to continue higher first before it starts to pull back and perhaps back to the 50 fib, where this rising channel could intersect as well. So 50 fib is at 1925. And there's no other major news. There is also some every Wednesday before the NFP, the ADP employment, that's for the private sector. This time on Thursday, there is also the PCE price index, so that could be another gauge for inflation. But anyway, the key one is still the non-farm payroll report, which was good the previous week, previous month, sorry. Okay, but looks like it's likely going to consolidate for another week. And although the range is still quite reasonable for trading, but this was going to be the range, I think. All right. We could also add this as a resistance wick here. And that is at 1974.41. So it could squeeze the price inside a ascending triangle. All right. So let's also take a look at the US dollar index, the DXY, and see how it relates with this spot gold move. Here's the US dollar index, DXY. And the last week has just been slowly grinding its way up, trying to approach the 99.00 level after finding support from the 38 fib retracement back down from the highs and bounce off from the 98.00. And there was lack of news impetus from last week, and likewise for this week until this Friday's non-farm payroll for April. Non-farm payroll report. There are also a couple other news before that, but that will be the major one coming up. And I think I can move this fib higher up now as well, and that's aligned to the 162 up here now. Okay, and this retracement fib is still valid. That's the swing high, and pull back into the 38 fib. So resistance is still there at 99.44. Let's take a look on the 4-hour time frame. Yeah, this is for the whole of last week, and it's been basically consolidating and just ranging. That's in a fairly tight range here. So just consolidating in here. So yeah, on the daily time frame. So that's only in a 60 pip range or so. So it's trying to climb up higher, and there's not much fundamental drivers until next month, until the new month, coming to the last week of the month now. So it's been consolidating with this, looks like a trend line that's a downtrend line. The support is still around at the 98 and perhaps even at the 38 fib. So it's in a big descending triangle. Okay, so we'll see whether it's able to break out higher next week or just consolidate further as it consolidates into this descending triangle. So it could go down lower to the 98 level again. Otherwise, it needs to break out higher and then above the 99. Okay. All right, so let's head back to the other pairs. Let's move on to the dollar yen, where you can see a massive run up, and now it has moved right up to the 262 fib extension. So it is a massive swing move all the way up to this extended fib, and it hit the high of a multi-year high of 122.41. Let's take a look on the weekly time frame and the monthly, and that has not been reached since the early or mid or early 2016. Yeah, early 2016, in March 2016, that's already 6 years ago. And back to so let's add a couple more zeros here because there's a short through. That's 122. And here's 121. Okay, so this resistance at the 120 round figure did not last very long. It shot through it on Tuesday and almost reached the 262 by Thursday. So now that it's going to be our current resistance. And we may need to add the, let's move this support for now to 120, where the 200 fib extension is. Okay. So we'll see if there's going to be a pullback after this first significant pullback on the Friday. Since the early March, when it broke out higher, it has not made any significant pullback, just some consolidation and a pause for a day, and basically continue to rally. So the Japanese yen has weakened significantly, and of course US dollar has taken control. So we'll see if it's time for a pause And the pullback, this will be a significant pullback. So let's see if it's able to drop to the 200 pip at the just above 120, at around the 120 zone. And similarly, it's going to have an impact from the non-farm payroll report on Friday, as well as a couple of other news before that. Going to the 4-hour time frame. Let's take a look here. And yes, there's a continuation move all the way, just slight pause on the Tuesday, continue higher. And yeah, looks like it's right from the start of Friday where it gave back, made a significant pullback here, but continued back up to close above the 122. So we'll see if this can hold for a while around this area, and above that. Let's move on to the monthly time frames, and there are swing highs up here. At 123.75, so it's still quite a significant move away. Okay. All right, so do check out my other videos on the other major pairs. Have a safe week and a good trading week, and cheers for now.